Yo, what is good, guys? It's me, your boy, if I can remember, you guys already know we're in a building from saying. So, guys, today, I'm dropping the strategy that can potentially change the way you see the market, that can potentially change your situation. So make sure that you watch this video until the end so that you can get to see how you can be able to walk away with manipulation because of the price is being manipulated so that you can be able to trade with the market but not against the market because most traders they are thinking they're trading with the market but they're trading against the market. How do they know that? Is that over a long period of time they are not able to make money from the market? They are only making money maybe from today or tomorrow, but long term, they are not able to do what to make money. That's when you know that you are trading against the market. And if you're trading against the market, then chances of you being profitable are very low. They are not actually they are not there. You cannot make money while you are trading against them. You can gamble. It's like you can gamble and win a trade today, but long term, you won't be building a sustainable income. So the goal of this video is just to show you guys or be able to help you make make consistent results in trading or consistent profit. So the name of the strategy that I'm going to be teaching you guys today is called Judas swing. So as you know, guys, Judas is the guy who sold Jesus. So yeah, but then it's more of like manipulation type of things. So the first thing that we look out for is the directional bias of as to where the market is going. So what I normally do is that I check on my daily time frame to see the directional bias of to where is the market going for particular, probably for that week. I know that maybe for this week I'm looking at a bearish week or I'm looking at a bullish week. So you would be able to find where price is most likely to go on the daily so you can see where to enter in which direction. So the most important thing about directional bias, guys, is that you must be able to see which side are you trading into. Are you trading into buys or into sells so that you know your direction as to you're looking for buys or sells so that you know that maybe are you trading with the market or not, because if you're not trading with the market then you're definitely going to lose the money. But if you know the directional bias, then you know where the market is going. So now you're just gonna scale it down to smaller time frame to try and find your entries on smaller time frame, but you already know where the market is most likely to go based on what liquidity. So if you don't know how to use your daily bias to find the directional bias, you can just check on my weekly breakdown videos where I explain my daily bias and what I'm looking out for that week in particular. And then the second thing that you must look out for on your 5 minute time frame now is your range. You must see price accumulating or generating liquidity to then push either up or down. So now what I mean by this is that we need to see price creating this small range here, as you can see. When I see price creating this small range here, and then let's say if we are looking at a bearish market from our daily time frame. So what we want to see? We want to see price pushing and taking out this liquidity here. So because there are people who are trading support and resistance, they are entering selling opportunities at this area here. So we want to see what? We want to see these stop losses that are above this area taken out of this resistance. And we want to see people who are having buy stops, people who are trading breakouts, they have buy stops, and when price breaks above this area, it's now activate their orders. So what we want to see, we want to see those orders being activated, and then we want to see price pushing impulsively to the downside, breaking below this area. So that takes us to the next step, which is what? Which is displacement. We want to see the momentum in the direction of which we are looking to trade from. So now this is the what? This is the momentum. Sorry about that. So this is what now? This is the momentum that we are looking at for. This momentum here is what we are looking at for price to push to the downside, showing us that there's some sort of like momentum to the downside. That's when we're looking for those selling opportunities. But before, we want to see the momentum breaking the previous lows. It could be any lows. It doesn't have to be the one that was created by range. It could be any lows, but we want to see price taking out that lows. And then what we want to see price coming back into, obviously we want to see price coming back into a fair value gap. So once price pulls back into a fair value gap, then that's when you're going to be looking forward for those entries to the downside to take price, because you can see that both of these traders have been taken out. Those who were selling from here resistance, putting their stop loss above, they got taken out by this. And those who were entering buy stops, breakout traders, they got stepped out by this move to the downside. So us, we waited for this manipulation to happen, and then we were taking price to the downside. So those are the steps that we are looking out for before we can take our position. I'm still gonna go into the chart and show you an example of what am I looking out for. So this scenario is the same as when we are looking for a bullish scenario. So it's more the same. There's no difference. It's just like the difference is that it happens in opposite direction, but it's all the same. So when it comes to your stop loss, you're going to be entering your position here, and then your stop loss has to be above these previous swing highs. It has to be above these previous swing highs, and then you take profit. What I normally do is that I have two ways of my take profit. The first way is that I look at previous liquidity that has not been taken out. And then the second one is that I always target a 1:2, which is dynamic. It doesn't change, a 1:2. So that depends on if I see that the market maybe doesn't have so much momentum to continue pushing to the downside, then that's when I be like, okay, I'm going to take it a 2% on this trade while I'm risking 1% on this position, which is super, super nice and simple. So that's basically the overall strategy, but I want to show you on the real chart. So let's just dive into it now. All right, guys, so now we are on our chart. So I'm just going to show you guys exactly what I look out for here. So when I'm looking for my trade to kind of like go long or go short. So I'm just going to show you this example, guys. So on my daily bias is already, I'm looking for selling opportunities. So I'm looking at a bearish market as well on my daily bias. So the first things first, guys, as I did say that I want to see accumulation. So you can clearly see that we do have this range here, which is super, super nice and simple, and you can see. So guys, this is what we call a New York midnight. So when I'm looking at this, I'm looking at New York midnight. I don't look at according to the trading view, Asian session and stuff like that, because I'm not using that. I'm using the New York midnight. So New York midnight is equivalent to 6 a.m. in South African time, but you can still convert it in your own time zone. You can just come here and you're just gonna see your time zone here on the side. But then again, if you're using New York time, then you're gonna see here. If I can just convert to New York time, where is New York time? Let me just New York. So you can see that if you can just check where I put my crosshair is New York midnight, 12 and midnight. So that's what I use. So you can clearly see that what we have this accumulation or range here. So what's happening here is price is generating what liquidity, so that people are entering what they're entering selling opportunities here, putting their stop loss probably maybe above this area because of its resistance. So they are putting their stop loss above this area, stacking, or it's a continuation pattern, stuff like that, those kind of things. So what do we now see? We see price pushing up. So this is what we call manipulation. So we see price pushing up into the downside, manipulated by what? By price, which is super, super nice and simple to see. Everything is still moving according to our what? To our plan. So now, what do we see again? We see this push impulsively to the downside. And then what do we have here? We have a break of structure. As I did say, guys, that it doesn't have to literally break these lows here. Any structure that it can break upside to the upside, then you can look at that to say if there is momentum that broke this area, then that's our beautiful entry that we can be looking for, because of that is a beautiful displacement as well. But you can clearly see that price did continue pushing to the downside, which is super, super nice and simple, to be honest. So now our next step is identifying our fair value gap. So it depends. In this case, we have two fair value gaps, which the first one is the extreme one. Here, as you can see, we have the extreme fair value gap. I don't know what I did here. Okay, so we have the extreme fair value gap, and then we have the second fair value gap here. We have the second fair value gap here. So yeah, so you can clearly see, guys, that price didn't come to this didn't come to this extreme fair value gap, which is, I think, is super, super nice and simple. It's still cool. There's nothing so much into it. If price doesn't come to it, then it's fine. We're not going to be trading according to that fair value gap, but we're going to be trading according to the last one, or the recent one. It only becomes a problem when we have three fair value gap that has not been mitigated. If that's the case, then what do? We then look at the extreme one to enter in. If there are three fair value gap in a row following each other, we're not going to be entering on the second one or the third one, but we're going to be entering on the extreme fair value gap. So you can clearly see that this is where price pulls back into this fair value gap, looking for our short. All right, guys, so we're going to be looking forward for sales here, as you can see. So it just depends, as you can see, there's not, if you want to enter, if you don't want to maybe enter here, we can put our stop loss maybe probably just around these areas here, just to be safe with this. If price do decide to eventually come, because price can still come to this to this fair value gap. So for us to be more safer, we can just be like, okay, you know what, I'm just going to put my stop loss above these areas, or we can also go for these swing highs that were created by price here. And then our target, I said, guys, that we're looking for the most recent liquidity here. One thing that I didn't mention is that so sometimes it can happen that price can be drawn into liquidity. It can be looking for LQ for fair value gap. I mean, to fill this fair value gap, not necessarily looking to take out liquidity, but just to fill fair value gap. As you can see in this case, price was just looking to fill these fair value gaps. And once it was done filling the fair value gap, it's now continued to move in the direction that it wanted to move into. So what we're going to be doing here, we're going to be looking for a 1:2 risk to reward ratio here, just on the extreme of this fair value gap here, just on the extreme of this fair value gap. And it was a beautiful trade, a beautiful 1:3. So this is the scenario that happens almost every day on it might not happen on Euro USD on the day, but it happens on this pairs each and every day. So you just have to figure out which pair is most likely to have this kind of trade. But this trade, guys, if you follow these rules, then this can give you consistency over a period of like maybe 6 or to 90 days. So it just takes a lot of practice as well. Just give it more time and practice and practice and practice, and then you definitely gonna find your ways into this. Power of 3 is very powerful, guys. This is just power of 3, accumulation, manipulation, and distribution as well. So yeah, it's me, your boy, Falaki Mamba. I'm out of the building. Let it be peace. Let our brothers and sisters be safe, guys.